Welcome to the deep dive. You send us the sources, we dig in and pull out the key insights to get you smart, fast.
Uh-huh.
Today, we're looking at a really fascinating investment story from the shipping world. It's pretty volatile, that sector.
It really is. And this one centers on a legendary figure, John Fredriksen, and his big bet on the oil tanker company, Frontline Ltd.
Yeah, Fredriksen. If you follow shipping at all, you know the name. Norwegian-born, the tanker king, basically.
Decades in the business,
Hmm,
known for building companies, restructuring them, making these bold, sometimes contrarian moves. He really knows the cycles.
right. And the scene for our story is set around 2019. Frontline had recently come out of some tough times, right? There was a restructuring in 2015.
Exactly. Fredriksen's private company, Hyman Holding, played a big part in supporting that. And as a result, he ended up owning a huge chunk, over 40% of Frontline.
Over 40%. Okay.
And a crucial bit, back then in 2019, tanker rates were, pretty weak. They're
Right.
laying the groundwork for what came next.
Okay, so that's our mission for this deep dive. Figure out how that long-term investment, starting from that low point, generated such substantial returns between 2019 and early 2024.
Yeah, what were the key ingredients for success in such a notoriously cyclical industry?
Let's start with the numbers. They kind of lay it all out.
Okay, so May 2019,
Hmm.
Fredriksen, through Hyman, owns about 79.1 million Frontline shares.
Right.
The share price back then was hovering around, say, $7.60 on the NYSE.
Okay, so do the math. That's about $600 million.
Yeah, roughly $602 million for his stake at that point.
Now, fast forward, early 2024, what are we looking at?
Big difference. The share price climbed way up, over $26 a share.
Over $26 for the same number of shares.
Same at 79.1 million shares, now valued at approximately $2.09 billion.
Wow. So just the share price appreciation, that's like 3.5 times the initial value.
Exactly, a 3.5x increase over about 5 years.
That's a pretty stunning return.
It is. If you calculate the internal rate of return, the IRR, it comes out somewhere in the ballpark of 28 to 30% per year.
28 to 30% annually. That's huge.
Yeah, and remember, that's just the share price growth.
Ah, right. You mentioned the rates were low in 2019, but things pick up later. Did Frontline start paying dividends again?
Oh, definitely. And they were significant. For example, just in Q1 of 2023, they paid out 30 cents per share. There were other payouts too.
So that $2.009 billion figure for his stake, the actual return Fredriksen saw was even higher because of those dividends.
Absolutely. The total return was considerably more impressive. So, okay, how did this happen?
Right. What drove this? Success factor number one has to be the market itself, the tanker cycles.
Definitely. You have to understand shipping cycles.
Yeah.
2019, as we said, was really a low point. Oil demand growth was sluggish. OPEC had made production cuts earlier.
And there were just too many ships floating around, keeping rates down.
Exactly. Fleet oversupply. But Fredriksen, he's seen this before. His strategy wasn't to bail out. He held on.
He's known for that, right? Riding out the downturns. Didn't he even advocate for consolidation then?
Yeah, he was pushing for the industry to consolidate,
Mm.
which often happens in weak markets. He was playing the long game.
And then things changed. Unexpectedly.
Well, yes and no. Cycles turn, but specific events definitely accelerated it. Late 2019, early 2020 saw rates spike up.
And then COVID hit in spring 2020. That was wild.
Oh, completely wild. Suddenly there was this massive glut of crude oil, nowhere for it to go.
Yeah.
Demand for floating storage exploded.
So ships were being hired just to sit there and hold oil.
Pretty much.
Yeah.
And the rates for the biggest tankers, the VLCCs, went astronomical, briefly over $200,000 a day.
200 grand a day. Just incredible. Okay, that didn't last forever, obviously.
Now, those peaks are usually short-lived. But then came another major upswing in 2022. Different drivers this time.
Post-pandemic recovery kicking in.
That plus the huge disruption from the war in Ukraine and the sanctions on Russian oil. That really shook up the trade routes.
Right. Explain that impact. How did sanctions change things for tankers?
Okay, so Europe, which used to get a lot of Russian oil via shorter routes, suddenly needed to source it from much further away, the Middle East, the U.S., West Africa, longer voyages.
Longer voyages, meaning ships are tied up for longer on each trip.
Exactly. And Russia, needing to sell its oil, had to send it on much longer journeys too, mainly to Asia. Again, longer distances.
So even if the same amount of oil is moving globally, if it takes longer to get there, you effectively need more tanker capacity.
Precisely. It soaked up available ships, increased what's called ton-mile demand, and Frontline operating mostly in the spot market.
Meaning they could charge whatever the going rate was day to day.
Right. They were perfectly placed to benefit from these soaring rates.
Hmm.
We saw tanker indices measures of average earnings just skyrocket, hundreds of percent gains from 2019 to 2024.
And Fredriksen, by holding his shares through the weak years,
Was perfectly positioned to capture the full upside of these strong years. Patience paid off big time. It really shows that buy and hold can work in these deep cyclical markets if you have the conviction.
Okay, so market timing, or rather market patience, was key. What else? You mentioned strategic moves, fleet expansion.
Yes, that's the second factor. Fredriksen is famous for buying assets when they're cheap countercyclical investing.
And he did that here.
He did. Late 2019, remember, when the market was still weak, Frontline struck a big deal with Trafigura, the trading house.
What was the deal?
They agreed to acquire 10 modern Suezmax tankers. These are pretty large ships, one step down from the VLCCs. The price tag was around $675 million.
$675 million. A big bet at a low point in this cycle. How did they pay for it?
It was a mix, partly funded by issuing new Frontline shares to Trafigura that gave Trafigura about an 8.5% stake in Frontline.
Interesting. So Trafigura became a shareholder.
Yes, and the rest was financed with debt and these things called sale-leasebacks.
Sale-leasebacks. Can you quickly explain that?
Sure. Basically, Frontline buys the ship, sells it immediately to a finance company, and then leases it back for a long term. So they get to use the ship, but the finance company technically owns it. It frees up capital.
Got it. Okay, so they bought these ships in late 2019. And the timing.
Turned out to be brilliant, really. Maybe lucky, maybe skillful, probably a bit of both. The ships were delivered in early 2020, just as rates started taking off.
Wow. Talk about prescient.
Yeah. So this deal didn't just make the fleet bigger, it made it younger, more fuel efficient, more competitive, right when the market turned up.
And as earnings potential rose, the value of the ships themselves would have increased too, right? Adding value to the company beyond just the freight rates.
Absolutely. The value of their whole, now larger fleet appreciated significantly. So that acquisition looks like a masterstroke in hindsight.
Okay, market cycle, check. Smart fleet expansion, check. Then came the geopolitical factor, the Russia situation in 2022.
Right, factor 3. We touched on it, but deserves emphasis. The sanctions forced this huge reshuffling of global oil flows.
Longer routes, more demand for ships.
Exactly. It was like a windfall for tanker owners with ships available in the spot market. It just tightened the supply-demand balance significantly.
And Frontline capitalized.
Hugely. Their earnings in 2022, 2023 were very strong. They paid out those big dividends we mentioned. The stock did really well.
It fits with Fredriksen's view, doesn't it? That tanker markets actually benefit from shocks and dislocations.
It really does.
Yeah.
And, it's not just about being in the right place. Frontline had the financial strength, the modern ships, the global operations. They could actually execute and take advantage of the situation quickly.
Which brings us neatly to the fourth point, maybe. Financial management.
Yes, absolutely crucial. Financial discipline. The Frontline, after the 2015 restructuring, was different from the pre-2008 version.
How so? Less debt.
Generally, yes. Pre-2008, the model was often high leverage, pay out almost everything in dividends when times were good. Post-restructuring, Frontline seems more conservative. Moderate debt levels using those sale-leasebacks, managing their debt-to-asset ratio carefully.
Lower break-even points, I assume.
Exactly. That meant they could handle the weaker years, like 2019, without getting into financial distress or having to issue tons of new shares just to survive.
Which is critical for existing shareholders like Fredriksen. His stake wasn't heavily diluted away during the downturn.
Precisely. He maintained that large ownership percentage, so when the market recovered, he reaped the full benefit. It feels like a shift in the industry, too, maybe, towards more sustainable balance sheets.
Less focus on maximizing leverage at all costs.
Seems like it. And you have to assume Fredriksen's influence and having strong finance teams were key to navigating that prudently.
Okay, so putting it all together, by 2024, Frontline is riding high, stock prices up, paying dividends.
Yeah, strong position. They even announced programs allowing them to potentially issue equity opportunistically, maybe for more fleet renewal or dividends, showing financial flexibility.
And Fredriksen's stake, as we said, worth over $2 billion, not counting years of dividends.
A massive return. And it's interesting, he didn't just cash out, right? This wasn't like a typical private equity flip.
No, he stayed deeply involved. There was that whole saga with trying to merge with Euronav, the Belgian tanker giant, in 2022-23.
Right. That was a huge potential deal. The idea was to create this absolute behemoth in the tanker sector. Fredriksen had built up a stake in Euronav, too.
It got complicated. The merger eventually fell through. But it showed his ambition, right? Still looking for big strategic moves, consolidation.
Definitely. It underscored his focus on value creation, even if that specific deal didn't happen.
Sure.
And Frontline did end up buying some modern VLCCs from Urinov later anyway, so some consolidation occurred.
And crucially, as of late 2024, he's still the main shareholder, still steering the ship, so to speak.
Signals continued confidence, you'd have to say. The whole 2019-2024 period is just a powerful case study. Deep sector knowledge, patient capital, navigating volatility.
That 3.5x return plus dividends really speaks volumes in a tough industry.
So if we boil it down, what are the big strategic insights here for, anyone investing or watching cyclical industries?
Well, first off, the power of buy and hold, right? If you have the conviction and the staying power, riding out the cycle can beat trying to time the peaks and troughs. Fredriksen's 5-year hold is Exhibit A.
Patience is key. Second, expertise matters immensely. Fredriksen isn't just a money guy. He knows shipping inside out. That lets him spot opportunities like the Trafigura deal. Deep industry knowledge is invaluable.
Third, financial discipline. That moderate leverage post-restructuring was critical. It allowed survival and opportunistic growth. You can't seize opportunities if you're drowning in debt.
So true. Keep your powder dry, manage the balance sheet. And maybe fourth, strategic flexibility. Even with a long-term hold, thinking about moves like the Euronav merger shows you need to be adaptable and consider ways to unlock value.
Yeah, good point. Having options. So overall, the Fredriksen Frontline story is really this great example of cycle-driven investing combined with smart management and strategic action.
Absolutely. A 3.5x return plus dividends over 5 years in tankers. Pretty remarkable.
It really makes you think, doesn't it? Applying these ideas elsewhere.
Yeah, exactly. It kind of leaves you wondering, are there other sectors right now that feel like shipping did in 2019, overlooked, maybe at a cyclical low?
And what kind of deep, maybe even niche expertise would be the key to navigating that sector successfully? Makes you look at things a bit differently.